as the debt increases and as the money supply increases, gold and silver are going to go higher. And silver goes on massive tears, every few decades or so. And we have yet to see one here. Silver's been marching up consistently and it's been relatively stable, right? Day by day by day. And we haven't seen that big spike yet. And then another thing, if you look at the GLD market cap compared to the SPY market cap, two ETFs, equity ETF, gold ETF, the GLD market cap was greater than the SPY market cap in 2011. And now it's at like 5% of the SPY market cap. Like a few investors are tuned in, but the average majority, they're not there. We're nowhere near a top. It's going to continue rising. They're going to keep spending debt. And we've got a long way to go. This is a multi-year gold and silver bull market.
As debt and the money supply increase, gold and silver prices are expected to rise. Silver, known for its periodic massive surges, has steadily climbed but hasn't yet experienced a significant spike. The GLD ETF's market cap was larger than the S&P 500's SPY ETF in 2011, but now stands at just 5% of SPY's market cap. This indicates limited investor attention on gold, suggesting significant room for growth. Given the ongoing rise in debt and spending, we're in the early stages of a multi-year bull market for gold and silver. The speaker, Garrett Goggin, is a prominent figure in the precious metals industry, and he is known for his expertise in gold and silver markets. Each dollar of debt generates only 83 cents of GDP, a decline from previous levels of over $2 or $3. This reflects diminishing returns on debt, though the U.S. economy remains reliant on debt for growth. Modern monetary theory, MMT, popularized by Stephanie Kelton, suggests that debt is beneficial since the government controls the money supply, and inflation depends on excessive economic growth, not debt levels. Both political parties have embraced MMT to justify large-scale spending, arguing that debt is good for the economy and doesn't pose a significant issue. However, silver is seen as a cheaper derivative of gold and has historically been valued as a store of wealth. Despite its lower price, around $30 per ounce compared to gold's $2,600 per ounce, silver is in a significant supply deficit, with demand exceeding annual production by 100 million ounces for over 5 years. Garrett points out that silver's critical role in electronics, EVs, and military applications, such as Tomahawk missiles, drives this demand. Innovations like Samsung's silver-based batteries further increase consumption. With rising debt and government spending tied to economic growth, proponents believe silver prices could reach triple digits, driven by its growing industrial and monetary demand. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
If you look at debt to GDP, every dollar of debt that's spent, it only produces 83 cents of GDP right now. And it used to be up above 2 and 3, but that declines. The amount of debt in the system produces less and less growth, but they're dependent upon that. The U.S. economy is dependent upon producing debt to generate growth. And then the last piece of the puzzle, MMT, Stephanie Kelton, right? She proposes that debt is good now, because debt produces growth. Debt doesn't matter because the government is in control of the printing press, and inflation is not dependent upon the amount of debt. It's dependent upon an economy growing beyond its means. So, both parties have embraced the MMT policy by Stephanie Kelton, and it gives them a way to spend a tremendous amount of money because it's good for the economy and debt doesn't matter. I see silver as a derivative for gold. Gold goes higher, silver goes higher. Silver's been a store of value for, 1,000 years, just like gold. It's obviously much cheaper than gold, trading at $30 an ounce versus gold at $2,600 an ounce. But, the silver market has been in a supply deficit for over 5 years of 100 million ounces. All the world's silver mines only produce about 800 million ounces per year. And the amount of silver consumption has been higher than the 800 million ounces. It's been 900 mil. 1 billion ounces. It's being utilized in all of our devices, the laptop I'm talking on, the TVs, the EVs, and people love EVs. So maybe the Green New Deal might not go ahead, but people love their Teslas. When you look at Samsung developing a new silver battery that uses, a kilo, 32.15 ounces of silver in it, which is an astronomical amount. And then one of the world's biggest consumers of silver is the military, right? Because they They don't care how much stuff costs. They use it for the wiring versus just the solder. And, there's ounces and ounces of silver in, each Tomahawk missile. That we have out there. And I was speaking to Keith Newmeyer a few years ago, and he's like, we were talking about that. He's like, well, maybe I should go mine Afghanistan then, you know, it's tied to the money supply. It's tied to economic growth. The debt's going to continue to increase. The government's going to continue spending lots of money. And we're at the tail end of that right now, where it's going to accelerate. People think it's going down. The debt spending is going to accelerate. They're going to have to accelerate it because in order to keep maintaining economic growth for the economy.
In a crosstalk with Daniela Cambone, Garrett says that U.S. debt, now at $37 trillion, continues to rise, with government spending making up 50% of GDP. Cutting spending could trigger a severe deflationary crash, making it unlikely. Judy Shelton, a known gold advocate, has pushed for a return to sound money, but a full gold standard is politically challenging due to its potential impact on spending. Instead, there are discussions of pegging GDP to gold, especially in Europe, with countries holding gold reserves equivalent to 4% of GDP. For the U.S., this could require doubling gold reserves or revaluing gold higher, allowing continued spending while maintaining monetary stability. Moreover, China currently holds only 1% of its GDP in gold, but has been steadily increasing its reserves each quarter. This indicates robust and sustained demand for gold, suggesting it will remain a key asset for the foreseeable future. Now, let's shift our attention to the interview.
Low rates, a tremendous amount of debt. The U.S. debt has been going, it's $37 trillion. It's been going up every single month for, over 50 years, and it's not going to change anytime soon. Another person that's involved, obviously, you got Elon Musk and Vivek, right? And with the Doji, the Department of Government Efficiency. And, they believe they're going to come in and cut all the fat, but they can't cut all the fat. They're going to try to. But the U.S. GDP consists of 50% of government spending. If they cut back government spending, our economy would go into a massive deflationary crash. So they're going to try to, but spending is going to continue. And lastly, Judy Shelton.
Yeah, of course. She's been on our show.
She's a favorite of Donald Trump. Donald Trump tried to get her on the Federal Reserve Board back in his last term, and he's going to try to do it again now. And Judy Shelton is one of the biggest gold bugs out there.
She is. Well, she just wrote a whole book on it.
Exactly. Yep. So, what this is America's Great Awakening. We're getting back to the truth. We're getting back to the truth of the food system. We're getting back to the truth of, government spending. But the one thing that the stone that they have to leave unturned is the monetary standard, because they can't get us necessarily back to a gold standard right away. Because that would cut government spending tremendously. The economy would go in a tailspin. So what they're going to do is keep on doing what they've been doing over the past 50 years is, keep on spending tremendous amounts of money to produce less and less amounts of GDP. But I tell you what, one thing that's coming down the pike that I've seen smoke signals across the European community is a GDP pegged to gold. The European community, if you look at the amount of gold that each country holds, it ranges from 3% to 8% of GDP. There's talk of bringing back a gold standard where you peg GDP to gold at 4%. You hold 4% GDP reserve, gold reserves in terms of GDP. U.S., if you value their 250 million ounces, it's about 2% of GDP. They would have to increase their gold reserves by double, or one of the things that's connected to all the Bitcoin stuff is they revalue gold higher. So this is the politically acceptable solution to be able to keep spending. They're going to keep spending. They're going to keep interest rates low, but we're going to peg GDP to gold, and they'll be able to work that. That's an economically feasible solution for all the politicians, because it lets them keep on spending. And then China only owns 1% of their GDP in gold. China's been adding tons and tons, every single quarter to get their gold reserves up to that 4% of GDP. That is the acceptable level comparable to the European community. So gold's not going anywhere anytime soon.
Rising debt, expanding the money supply, and increasing global demand for precious metals drive the outlook for a multi-year bull market in gold and silver. With silver facing a supply deficit and gold gaining attention through potential GDP pegging strategies, both metals appear poised for significant growth. Countries like China steadily increase their gold reserves, signaling long-term confidence in gold as a store of value and a hedge against economic uncertainty. How might a GDP-pegged gold reserve system impact global monetary policies and trade dynamics? What role could silver's industrial demand play in sustaining long-term price growth beyond its monetary appeal? Feel free to share your thoughts in the comments below. If you found this content valuable, like it and subscribe for more insights. Thank you for being part of our journey. We appreciate your support.